Did you hear the great news that mortgage rates moved lower today? Why? The Consumer Price Index report gauges the cost of goods that you and I pay for. It showed that those numbers moved slightly lower than last month, which helps that inflation is no longer moving higher, at least within check, but still not at the Federal Reserve goals of where they want to be. So that turns us to the future Fed rate cut. Now, when you hear future rate cut from the Federal Reserve, that's the first call to action. It's not the time to take action on a refinance yet, but to take it seriously to get a game plan in place. What I mean by that is when you consider refinancing, it can be done at any time, but it has to make the most sense based on cost and savings. You don't want to have the break-even point kick out too far, because if rates continue to move lower, like it did from 2020 to 2022, you could have a potential to refinance up to 2 times or more. So if you're not taking into consideration the actual cost and the savings, then your break-even point is getting kicked out too far, making it less suitable to do a second refinance. So it's really important to keep that game plan, and the first call to action is when you hear Fed rate cut.